Let's get into it. Tariff madness.
Yeah, last week was crazy. Tariff news whiplashed the market. Last week, Donald Trump temporarily paused the tariffs for 90 days, sparked a rally in both Wall Street and Bitcoin. Bitcoin went up past 82,000. That initial reprieve, particularly for consumer electronics, gave hope to tech companies and fueled optimism about a possible US China trade deal. However, the relief was short lived as officials clarified that the pause was strategic, not permanent, and the new tariffs potentially looming for smartphone semiconductors and the electronic supply chain are coming. Trump reinforced his stance in a post this morning, denying any true exemption and emphasizing a tougher trade posture towards China, signaling that the tariff clock is ticking once again.
Just stepping in there for 1 second. So at first, it seemed that there was going to be exemptions on certain, like, let's call them the tech tariffs, but
Yeah,
that was not the case.
no, it was not the case. Um, we still don't know what kind of tariffs or controls or bans are coming, but we've been promised by first by Lutnick, and then now by Trump in this Truth Social post. So we'll see what happens on Monday, I guess. The center of all this, though, of course, was the U.S. and China kind of trade war escalation that happened last week. The U.S. imposed a 104% tariff on Chinese imports. This was raised to 125%. China retaliated, increasing its tariffs from 84% to 125%. And now, I think again this morning, China also announced that they were banning exports of some rare earth minerals to the U.S. So we're having this kind of ratcheting up of the trade war, moving from tariffs now into just straight up banning certain things. Again, pretty wild stuff. I'll just kick this off kind of with what I see as the significant thing here. This is obviously, I think, the reshaping of the world order, and the U.S. has in effect kind of drawn a line in the sand and said either you're with us or you're with China in terms of trade, but not just trade, but kind of spheres of influence.
Yes, and many people have been talking about where this is all headed with the suggestion that we're heading towards a new sort of Bretton Woods, a new accords that reshapes the financial system that we've sort of had here for the last 80 years.
Yep. Anything else that you think is significant to this, Graham?
Well, yeah, I mean, as it relates to Bitcoin, right? So, like, what does this all mean for Bitcoin? Now, some people, I think, are of the opinion that with this, call it new multipolar world, so you've got, for a long time, right, it's been just the US, okay? Now, for sure, it's looking like it's at least the US and China, possibly more than two poles, and there may be a BRICS pole or a Euro pole. So basically, what we're getting is a multipolar world. Now, people, I think, are arguing that that new environment is likely to be a tailwind for a neutral, decentralized, non-government asset like Bitcoin. And one of these people in that camp, I think, is Lynn Alden, who is a respected commentator in the Bitcoin space. And in an interview on Monetary Matters just a few days ago, basically she said, all right, if you do manage to reduce the trade deficit, and what that means is there's fewer dollars going out into the world, then there has to be weaker demand for the dollar eventually, and it forces the world to use other assets. Now, like this process is already underway, and it's been underway for arguably since the 2008 recession, like the great
GFC,
It's been
Great Financial Crisis.
great financial crisis. Thank you, David. It's since then been a secular bull market in gold, and like a gradual moving towards gold. And the thesis is that with Bitcoin with its like superior characteristics relative to gold, at least in the digital era. So obviously it's easier to move around. Maybe even it's scarcer than gold. Bitcoin benefits in that environment. If that's the case, right? If Bitcoin does benefit in this new multipolar environment, you might be asking yourself, why hasn't it pumped, right? We've seen gold pump to historic new highs here in the last few days. Why hasn't Bitcoin done the same? And I think the answer to that is that it'll just take time. So as we know, Bitcoin is kind of a chameleon of assets, right? You have it reacts differently in different scenarios, and you have different types of Bitcoin investors. So there's some people who see Bitcoin as a risk on play, and like similar to tech, and that group of investors might be exiting the market right now. On the other hand, you have like the Bitcoin OGs, and they've always seen Bitcoin as a bet against the traditional order, which is breaking down. And the argument is that more new market participants are likely to see Bitcoin in that light as the bet against the traditional order. And I think we've already seen that with the likes of Larry Fink basically saying that a few weeks ago.